All right. Good morning to everybody. Happy Monday and welcome back. All right. Good morning to everybody. Audio sounds great. So we'll go ahead and get started and welcome back. My name is Jared. This is Engineering the Markets. It is November 29th, 2021. And we are looking at a market that is in sort of a flux of different, I would say, anticipation for the news event that we got on our previous week. So last week, we had a shortened week in the market. We obviously had Thursday where the markets were closed. Friday was a half day, and yet the market was advertising a higher volatility period throughout that week, both at the beginning of the week with a larger than expected move, and with some of the volume that we were seeing starting on the Monday session. Now, if we look at the SPX, which is where we often start on a Monday session, we are often referring to this concept of expected move week in and week out. The expected move allows us to get a gauge of where volatility is pricing risk for the market on the week. And oftentimes, a more efficient market will remain within these bounds. You'll see oscillations between the upper and lower bounds of the expected move, but no significant breaches. And if a breach does occur, you often want to see the market respond with elevated volatility or just a reassessment of risk in regards to that expected move on the week. So last week, if we look back at our previous range, the market was pricing in about a 55-point expected move. And on a normal week, this would be fairly insignificant. We've seen 55, 60-point expected moves previously, most notably throughout most of the November timeframe, as the market has been more or less range bound for about 2 to 3 weeks. What was interesting, of course, was we noted that on a shortened market week, you often would want to see the expected move be slightly reduced because there's often less trading volume. Usually the market is unable to move as significantly, given the fact that there's simply less days to perform that transactional motion throughout the week. But we didn't see that. We saw a market that was pricing in the same amount of relative risk as a full week prior. And we were seeing a market that, at least in the past couple of weeks, had been relatively efficient. Market had stayed within these bounds as we saw the range-bound trading occur. And yet we knew that the market did have some fairly poor internals. Market breadth had been going down significantly throughout those periods of time. The tech sector and the consumer discretionary sector were two of our lead bull sectors, but we weren't really seeing much rotation into other areas of the market, especially for the SPY, which is dominated by tech, but also has high weighting in healthcare, financials, consumer discretionaries, and even something like communications, the likes of Google and Facebook being those key names. And now, of course, we did have our Friday catalyst, the likes of a new COVID variant that, of course, put the market into a bit of a flux with regards to some of the travel sector starting to sell off. We saw lots of sharper pullbacks in the overall market internals. And while there was a lot of red throughout the entire market, we saw pockets of strength returning back to the likes of Moderna and any sort of biotech related to vaccine production or implementation. So looking at the week ahead, we're looking at a market that has expanded its volatility. And that can easily be seen in a few ways. One, you could simply look at the expected move for the week, which has gone from what has normally been about a 55 to 60 point move week in and week out, to now we're sitting at about 155 point expected move. Remember, the way to look at this before the market closes or during a weekend session is to simply look at the series for the market that closes on the Friday of the week in question. Here I have the 3rd December 21 series. If I shift over here, you can see that 154 to 55 point expected move being priced in to the SPX this week. Now, ultimately, the market does not have to achieve that expected move. That's sort of the idea behind it. And if we see volatility contraction throughout the week, this expected move should contract very quickly into more sort of nominal readings. But as we saw this sharp breach on Friday, market obviously was attempting to reprice some of this new information, as it was a bit of an unexpected event for the market, along with the fact that we've been seeing some warning signs throughout the entirety of the market internals for about a week or two. All of this culminated into a large spike in volatility. So as we see, the expected move for the week is being priced in at about 47.50 to the upside. That would bring us pretty much back to all-time highs for the SPX. And then a downside move of about 44.40. Now, you look at these ranges and you might say, well, that would be a pretty drastic move. No matter which way we go, it's high volatility expected movement. So how do you prepare for this as a trader? One thing to consider is the fact that the market is trying to price us in to the option side of the SPX. So obviously the option side of the market anticipates risk, and what it's trying to do is see if that risk is overblown or is it appropriate, and is the repricing adequate for the week ahead. So day in and day out, you may want to review what the expected move is relative to the actual movement of that session. One thing that makes the SPX so interesting is we do have multiple series throughout this entire week. We obviously have our Monday series, our Wednesday series, and our Friday series. This is normal for the SPX. It has the Monday, Wednesday, Friday sort of intra-week series breakdown. But we also have a monthly close. So this 30th of November also falls within this week. And what we can be looking at is expected movement pricing throughout the week, using these different series as sort of milestones of whether or not the market is achieving this expected movement. And just as a way to kind of showcase how significant this expected move is, if we look at today's date and the pricing that was done on Friday to Saturday session, basically after market close, today's series was pricing in approximately, make sure I have the right one, about a 72 point move. So what is normally a full weekly expected move is now being priced in for one trading day worth of activity. This is very notable because it changes the way that you as a trader might approach the market for the next couple of days. For one, if you're an options trader, you might be a little bit more cautious selling or even buying short-dated premium. You may also consider protecting yourself with the likes of not necessarily selling naked calls or puts and holding them throughout multiple periods of time, multiple sessions. The idea is pretty simple. Obviously, the market has expanded this volatility, and if the market does not contract it, this volatility is showcasing the amount of risk within the price range that has been identified by this weekly series. So if you're a seller of option premium, you're looking at the expansion of range based around the option market, and you may want to either just cap your risk if you are wrong, or move your premium selling trades out further in time, essentially making room for this volatility to contract and your strategy to have more time to be successful. Additionally, if you're an option buyer of premium, you may want to be careful going out and buying short-dated heightened volatility premium because the market has already begun pricing in these larger than expected moves. It'll be a little bit more challenging to buy short-dated premium, and even if the market gives you an expansive move, that heightened IV may also contract, and your risk to reward will be skewed in this way. So a couple of ways to just sort of assess what has occurred in the market, along with the fact that the market is trying to price all of this volatility in. And when we talk volatility, what does that kind of look like? Well, we can start off with the VIX. We can start by looking at 30-day volatility in the SPX and simply see that the VIX did have a significant spike on Friday's session. Not only did we see a VIX that was testing the 20 mark leading into that Friday session, this has sort of been an inflection point for larger volatility spikes in the past and often more expansive volatility events overall. But not only did we see the volatility break this level on the market sell-off, but it did so in a gapping fashion, essentially showcasing that the market was attempting to price in this new information in a hurry, and it might have also been a bit of an overcorrection in some regards. What we'll be looking for is, can this volatility subside? And if so, using that moment in time to sell premium, but understanding that the market is pricing in risk. We want to be careful stepping in with undefined downside risk overall. Some other notable market shakeups last week, the likes of crude. Obviously, with the impending idea of possible travel bans, the fact that we've had some supply-demand issues prior to this news, and the fact that this market often will be overcorrective in the likes of continued travel restrictions or just less travel overall as fear kind of grips the market, we can see this larger sell-off occur in crude and the overcorrection of this crude market back to the 200 period moving average. Now, is this an overcorrection? Obviously, it's a bit early to tell as this market was in a period of consolidation prior to this event. We're actually coming into an area of support. Market was starting to retest a previous swing high back in July and seeing a bit of a minor rally occurring off of this level. Obviously, now that we've come to lower support zones, the risk to reward if this low has been marked is very attractive. But once again, we need to be aware that the selling volume was significant as we broke down from support. We also maybe want to review other peer areas of the market and see if that reaction was more or less bullish or bearish on that Friday session. One thing I found kind of interesting about this is while the crude market did have a 10% drop, and essentially the crude market from high to low is considered inside of that bear market territory, about a 20% drop overall, the energy ETF, XLE, put in a bit of an interesting bullish pattern. I say bullish mostly because we came back to prior support. We found some interesting buying strength on a sell-off day in the market. And if you dig a little deeper and look at the lower time frame, you'll see that most of the bullish volume actually occurred in the afternoon sessions of that shortened Friday session. So interesting recovery from XLE amidst a crude market that was selling off quite sharply. And obviously the SPX was down about 2 sigmas throughout the week, essentially a breach of the expected move. Some other interesting changes throughout that Friday session, sort of assessing what the market did during that time. We were looking at the dollar. And throughout the period of the past couple of weeks, the dollar has been in a strong uptrend. Essentially, we've been seeing market strength inside of dollar-based products, the likes of UUP as a trading vehicle, looking at a breakout and a strong uptrend overall. But on Friday's session, this actually saw a bit of weakness. We saw a bit of a correction in the dollar strength. So I want to keep an eye on this market, basically looking for this uptrend to end. And if I'm simply looking at simple technicals, we might want to be on watch for something like head and shoulder type structures. Essentially, this most recent extension had a very poor lack of follow through. And while this is not necessarily a perfect structure, we may want to be on watch for something like a failed range expansion in this area, leading to a decline in the dollar over the next couple of days. This is, of course, just always looking to see what the market is doing, what is it advertising at the moment, and not necessarily looking for that to end abruptly, but looking for the posturing of the market to revert the dominant trend. Obviously, the dominant trend on the dollar has been to the upside. And while the overall chart on the dollar remains a bit range bound, we can see that we were coming into some areas of interest in the past. Previous swing lows that led to significant rallies, along with this weekly pin bar, possibly setting the stage for a bit of a correction in this bullish breakout that we saw. Shifting over to the IWM. This was the area of the market that was seeing the most weakness on Friday's session. It's worth mentioning because we've had multiple discussions about the IWM. We saw the very dominant breakouts of this range occur a couple of weeks prior. We were hitting some topside targets, essentially that fib extension, using this range as a gauge for where to look to take profit. Obviously, with all-time highs, it can be challenging to find moments to take profit as we don't have clear levels of support or resistance. And we're simply trusting the energy of the range and the breakout potential to try and lead us to those extensions. Now, this market has been selling off ever since that first target has been met. And what's most interesting about Friday is the market finally collapsed back into its range. We were seeing some possible buying support occurring off the 50 and occurring off of what I consider to be the range high, which is the first dominant buying climax or sell swing that occurred back in early February. So now that the market has essentially collapsed back into this range, we simply want to change the perception of this market back to what it has been in the past, because bulls did not necessarily prove it to us that the range bound trading was over. We're back at VPOC, we're back at value. And while this market was looking great for upside, we simply have to review what is in front of us and assess the fact that this market has returned to the area that has been the dominant price for the period of about 8 to 10 months. That's, of course, VPOC. So we will assess this market moving forward. We're seeing market recovery throughout different areas. IWM is no exception, bit of a gap up across the SPY, Qs, and the IWM. And oftentimes the most oversold index will often see some of the best recovery bounces on the days where things sort of settle back into their normal trading activity. But from the perception of this entire range, we are back at neutral. We're back sort of at the starting point where this breakout occurred. And while it was a bit of a bullish thesis, we essentially have to assess the idea that this market may simply be back in its range and look at range-bound trading strategies moving forward. So, finally, as we look at the Qs, pull back our moving averages, we see that the Qs have finally broken down the 20 period. Pretty interesting structure overall. The Qs actually didn't see a lot of selling pressure throughout Friday's session, and tech continues to be sort of a dominant area of strength, not only resilient amidst selling pressure, but also just leading in regards to where the market breadth has been holding up overall. Will the market continue to posture itself this way? Will the Qs be looking at another channel resistance point? Something that has been the dominant thesis for the past year to year and a half. This channel inside of the NASDAQ continues to be a guide. It essentially shows where bulls have the best risk to reward near the low end of the channel, and where bears have the best risk to reward for shorting or fading this market, with the understanding that these have been less, I would say, momentum driven. Often the market will need to roll over or just fade lower to see that good risk to reward take place. We have multiple examples occurring back in time here in the September correction. And then, of course, our dominant bullish supports that create the lower end of this channel. Ultimately, if I'm looking at the NASDAQ on a weekly basis, I'm not necessarily that interested in stepping in heavily long inside of the NASDAQ that just printed an engulfing bearish candle with higher volume and at channel resistance. Ultimately, this can prove to be a bear trap. We could see extended highs off of a recovery bounce, as the tech sector was the leader for a period of time. But the structure of the chart is not necessarily advertising that at this moment. And if we do see another sort of tech-based correction, the idea of just simply moving back into channel support, understand what that can do to the market if other sectors, once again, do not pick up the slack. We talked about this extensively last week. The idea that a healthy SPY is often going to be led by strong dominant sectors for periods of time. That strong dominance needs to be seen in other sectors, maybe not with leadership status, but ultimately carrying the market forward with relatively good internals and market breadth. And when I look at the equal weighted ETF or the S&P, the RSP, we can see that we're pulling back down into our 50 period. We saw that breadth and that equal weighted correction across the board. And the understanding here is that if the market is to recover, we need to see some breadth return in different sectors. Maybe it's tech once again. Maybe it's other sectors that may continue to lead in an environment that is fearful of this new variant. The likes of healthcare might be a dominant sector for a period of time, as we did see Moderna have some strength return. Obviously, Moderna leading in some of the discussions of whether their vaccine has any efficacy against this new virus, and whether or not there's going to be production of newer vaccines from this company that will fight this particular variant. You can obviously see that strength returning both on Friday's session and continuing today with speculation into the next couple of weeks, pushing it back into these upper 400 levels that the marketplace was not necessarily looking to return to, but obviously this news has changed this landscape significantly. So that was a big boost to this particular stock. It'll be on our watch list today, but ultimately be careful with it, as it has already moved 100% from its lows. We've seen a move from 200 to the lower 400s, let's say. that is a very significant move, and the volatility can sort of shake out shorter term traders in between. One last note for today's session, bringing up our sort of crypto space as a whole and just using our Bitcoin chart as a guide. We're seeing a return for the Bitcoin USD chart back to its dominant moving average support. The reason I say dominant is because it acted as support on the most recent rally, the most recent swing high into its previous all-time highs. And that is currently this 100 period moving average. Marketplace was able to hold this area. We even have a bit of a bear trap that formed on the daily. You can see this on shorter time frames. The likes of this breakdown that occurred after a double bottom with a lack of follow through and a large extension that occurred shortly thereafter. So this market is at a point where it has responded in the past. Obviously, projecting this much further than shorter term movements is a bit premature, as this market can spend some time here and consolidate over a period. But we are at a dominant support area. We are seeing the same reactions as we did in previous history. And for short-term traders like we are, maybe worthwhile to look at some of the Bitcoin ETFs, the Bitcoin miners, or just see if there's any sort of correlated strength in these particular names. Obviously, if you're a long bias trader, you're looking for pockets of strength in the market. Those pockets of strength are going to show in different areas. We talked about healthcare, the likes of Moderna, sort of the lead bull at this moment. That, of course, is not the only name that is worth considering. In fact, seeing another sort of gap, possible breakout gap that occurred on Friday. Pfizer, which saw new all-time highs and a bit of an overextension on Friday, as it has been trending higher for a long period of time prior to this event. And as we just mentioned, with Bitcoin possibly at support, want to be looking at our normal miner stocks, some of which are gapping up slightly this morning, or just looking at our new Bitcoin ETF trading vehicles, the likes of which are going to see that possible boost, something like BITO or the newer Valkyrie ETF, BTF. So no matter your trading style, no matter what instruments you're using, be aware that the landscape of the market has changed. We have a volatility spike that occurred on Friday. We need to be watching this spike to see what it does in the next couple of days. We have bonds. Marketplace kind of ran to safety in certain places on Friday's session. They spiked higher and the TLT returned to a known gravity area, a place where the market likes to consolidate and pivot. We see some dollar weakness. That, of course, is the counter thesis to the overall breakout that's been occurring over the past couple of weeks. And we're seeing a market where the breadth has really been suffering, and that allowed the market to sell quite sharply into that new news event. Watch out for travel. The likes of airliners, of course, breaking multiple supports. But once again, just seeing that recovery bounce on Friday, this can be indicative that this was a bit of an exhaustion move. This exhaustion gap could likely be filled before any sort of trickle-down selling continues. And if you are unaware of how to trade these types of structures, we do have some upcoming webinars this December that will be talking about gap fill and gap trading strategies, of which should be of interest for these more volatile markets that we are starting to see. So with that said, that's the end of my time. Hopefully you've had a wonderful holiday period and session last week. Hopefully you're sort of relaxed and returning to the market with fresh eyes, fresh perspective, and ready to sort of assess this new landscape. But no matter what you do, understand that the risk is here. This marketplace is throwing a lot of volatility our way. And overall, if you are unprepared for that risk, if you are unhedged, over leveraged, or just in the wrong position at the wrong time, the market will punish you. So be careful out there, trade safe, and obviously stay green. Stay small, trade small in these volatile markets. Understand that the volatility can be both your friend and your adversary during this time. So with that said, stay tuned for pre-market prep. We'll talk more tomorrow. And as always, keep it green.
All right. Good morning, everyone. Welcome to Pre-Market Prep. I hope everyone's having an amazing morning. Hope you guys had an amazing weekend. Good morning, Norm. How you doing, my friend?
Hey, good morning, buddy. I'm doing well. How are you?
Doing good, doing good. My camera's decided to take an extra day off this morning. I'll try to figure out why it's not connecting in a few minutes here. Um, Guys, hope everyone had an amazing weekend. What an insane day was on Friday. I know we spoke in the morning and it was just madness, Norm, on Friday. What's the latest and greatest on the overall market and the SPY? I know Jared touched on a
Well,
little bit of this already, but if we can just kind of recap.
yeah, I mean, the interesting thing about Friday was the day in which the event happened of the new variant. So little was known of it, the Omicron variant out of South Africa, and the worries of shutting down. It hit oil. I mean, just oil plummeted. A lot of these travel stocks, a lot of the things had, and then of course the work from home plays and biotechs involved in vaccines and therapeutics and everything took off, which to be expected a little bit, but. That day after Thanksgiving, super low volume day. Usually, a lot of people aren't around. A lot of the big money isn't around. They're out. They set stops. They set stops to protect themselves from excessive losses when they're not in the office. People know that, and probably taken advantage of to a degree, helping that big drop we had on Friday. As more information, I mean, the information was just so scant. as we were trading on Friday about what was going on with that variant, just that it was a variant of concern. The WHO was meeting such. And, Friday it started coming out. They were saying it was the people that had it had mild symptoms. And I mean, still, there's not a ton of information or data. Everything I could find over the weekend, specifically from the doctor that first noticed it, who's also happens to be, I guess, I don't know South Africa's political structure or, their institutions very well, but I believe she's the head of some physicians organization as well, that said every patient she had with it had extremely mild symptoms, a couple days of being tired and achy, and then back to normal. So anyway, I started seeing that come out and no signs of people being super sick. I was like, oh, you know what? I bet we start jumping on Monday. So we'll see.
Yeah, we'll definitely see how things go today. We are seeing a jump already this morning, almost 1%, with some great volume here. So let's see how things fall out this morning. All right, let's take a look at our gappers list today. We have a lot of stuff in the green, obviously getting a little bit of a bounce in the overall market. I see some of the travel companies are on here as well. Some of the Bitcoin stuff is on here. EVs, again, a whole lot of stuff going on here, guys. Almost every stock that was kind of down on Friday is in the green this morning, at least by a couple of percent there. So now there is a ton of low flow stocks leading our gappers list this morning. Not sure if you saw this, Norm, yet, but there's a bunch of low flow stuff here. We'll go through these and see what's looking good this morning to add on our list. And even on the gap down, some of the stuff that was nice, doing well on Friday on the low flow stocks is now on the down list. So we'll look into those. These are not that much fun when they're gapping down. They're great when they're gapping up, but you got to be very careful on these lower flow stocks. So, all right, let's dig into it, guys. Let's start here with, here we go. There it is. Let's start with Chris, KRYS. Hold on. Let's link our trade ideas. That will make this job a lot easier. So we're going to go ahead and do that now and link our montage. We're all set. And let me move this over here. Perfect. All right, so KYRS, excuse me. This one here this morning up 131%, 800,000 shares traded. The pre-market, it's really all over the place, guys. Very, very thin, even with 700,000, 800,000 being traded, shares being traded right now. You can see how thin this is. So I had an initial pop here with very, very light volume, guys. 80,000 shares. On this
it's a biotech. They had some top line results from a trial out this morning, which is their catalyst. But just like you said, they right now have a dollar spread. So this one, it really doesn't have enough volume. All the volume, it seems, came way early on that spike, and then it's just kind of sitting here with very, very little trading volume. So I'm looking at the single minute candles volume under 4,000, 5,000, 3,000, 1,000, 272 shares in a minute. Yeah, just not worth it.
Yeah. That needs a little bit more time to develop here if it gets any better. But right now we'll keep it off the list. And RXP, 21 million shares flow. Now this looks a little bit better, much better pre-market activity. As we can see here, 11 million shares traded. Not the cleanest chart we've seen in the pre-market action, but definitely a lot better than what we just saw here. So up 41%. Looks like they had an interesting day on Friday as well. We're going to add these guys here. This is NRXP, 21 million shares flow there. ADGI, no good, no volume, looking very light. We'll skip on that one. Heading to BFRI. This one was active on Friday as well. I don't recall how it actually played out. Yeah, it was active Friday. I think we had better low flows in this one, but you can see here, second day up 16%. Got to be careful here. Usually the second days are not the cleanest, but this thing seems to be having some momentum as it's gapped up now for 3 days straight, right? So Thursday, Friday, and now Monday here. So it could be interesting. We'll put it on here. We'll come back to it. BFRI. And it looks like Friday they had a couple of breakouts throughout the day, right? Not the cleanest thing, obviously, but a breakout here. It got really nice after 11, looks like. Nice little breakout there before the drop. So let's see how this develops. Pre-market action right now, it's not looking all that exciting, though. I'll tell you that right now. ATNF, not looking good, guys. Again, some initial action early on. It's just kind of dropping off here with no volume at the moment. So that's not fun. Let's get into mRNA, which has been extremely active, guys. Popped up on Friday pretty nice here, obviously, with the COVID situation and the new variants and all that stuff. This morning, they're up 10%, 1.2 million shares traded. These guys are definitely in play. I know they're tough to trade at times, and we saw that on Friday here, right? You got a nice little breakout in the morning. Then they get really choppy really quick. So we'll see this morning how this thing is going to play out, especially with the new news that has been broken out, at least about this thing not being so serious, at least from the sources that we have, right, Norm? So we'll see where it goes.
They came out and said they could have a specific vaccine to this variant available early 2022 if needed. And I think the CEO of Pfizer, I think, was on CNBC this morning, essentially saying they started already working on it on Friday. So
very nice. Here's a LI. They are up a nice 9.3 this morning. 1 million shares traded. It's this EV, right? Yeah, EV here.
Yeah.
So
they had earnings this morning.
Really good, man. Looking really good. I'm gonna add this on here. LI. I see Hertz back on our list again. Very active the last couple of days. Not looking great, man. Not looking
They
great.
announced a 2,000 share buyback. I would keep an eye on this.
Oh, this is a what you said?
A $2 billion buyback.
Ooh, wow.
Share buyback. I would put this on the list.
Yeah, we'll put this on
especially
here,
especially after this one's just been crazy. I mean, the way it's been trading. So I would keep this under consideration.
Been very, very, very active, this one here. So we'll definitely keep this on there. BYSI this morning. Intraday not looking great. I mean, sorry, daily not looking great. They got a pop here, 6.8. I think we can find something better, guys. 21 million shares float. Let's see what we got down here. AGC, very, very choppy. I'm just going to go to some names I know we're going to be looking at. Let's look at the travel companies here. CCL looking very good this morning, guys. They got 1.4 and they're gapping up nicely, you know, kind of reacting to maybe an overreaction on Friday, guys. And this is up nicely, 5.2 right now. So definitely on the list. You can look at RCL also moving higher. And I'm sure NCLH, which is right on here, also doing well. And that's going to take us right into American Airlines and the travel companies. These guys are also should be doing better this morning. Yeah, they are 2.4, 1.1. So I like American Airlines. I like CCL. I'm going to add United because that's one of my personal favorites. I do like the way United Airlines trades, so I'm going to add that one on here as well. You can add your favorites depending on what you like to do there. All right, we'll stop here. Let's see what Oxy's doing first. Oxy is up 4.3, so maybe some good news on oil this morning.
Oil's up big this morning.
Yeah, they are? Okay. Well, actually, no. In that case, we'll put it up here. We'll put it on our top list this morning.
Last I looked, I think it was 5.5%, 6%. So big jump in oil. That's a big move for oil.
We also, it is. We also got a couple of EVs on here. I know we have Lee, we have XPEV, which is up 3%. We have NEO up 2.8. Not huge. NEO's chart looks decent with some decent volume, maybe a possible. And we'll stop here in our gappers list because we can definitely keep going on this. Let's see what's gapping down this morning. A lot of low flow here, which you're probably going to skip through very fast. ISPC down 20%. Ouch. After a nice run on Friday, guys. I mean, this thing is just been so active. We saw the nice little breakout here. Again, down 20%. Here's when it starts getting, again, just fishy. You got to be very, very careful with this. I won't have this on my list. Just too wild right now.
They have, it's not a secondary, it's a private placement, but it's essentially dilutive similarly to a secondary. So I would skip on ISPC. I don't think it's a good one today.
Agree. AHPI this morning, they are down 18%. Again, these lower flow stocks, when they're crashing like this, they're very dangerous, guys. You get a lot of fake outs too, man. A lot of fake outs. You think it's going to pop up and then somebody would just slam on it, right? So very, very careful with this stuff. APVO, same here, no volume. And then last one, LGVN on the low flow team. I mean, this one has had a couple of really strong days here. They're not down much, only 7% this morning, 500,000. They were green early on. Maybe this can turn to something later on, but at the moment, it's just not looking great. MRK today, this is a very difficult stock to trade. We've been watching this ever since it gapped up here. And again, it's
Hell,
just
it's worse
very
than
difficult.
Pfizer.
It is. It really is. So I'm not gonna watch this one, guys. Careful with that one. ACUL, no good. Very light on volume. And let's get to Zoom. So Zoom, after a nice gap up, sold off on Friday. They're down 2.5 this morning. Zoom could be interesting. Zoom could be a good one today. Let's keep this on here, guys. I mean, it's just been getting hammered. I mean, if you look at their daily, you go back. They got a little pop yesterday with that news, but for the most part, I don't know. They're going to be good today, I think. All right, let's stop here. Norm, anything you like on your end this morning?
I'm still looking. My trading's going to be limited today. I have to leave right after the show for a COVID test. So,
Okay, gotcha, brother. All right, we'll keep those on here. Let's take a look over in our chat room. Let's bring this over here. Let's see what you guys like this morning. We'll start with Hitman's Shoe. I hope I'm saying that right. Apple. You're giving us Apple this morning. Let's start there. And they are up 1.7, 1.2. Yeah, again, all these companies that were doing well, that dropped on Friday, are good ones for today. I think Apple's an amazing one. I think they got great volume. I think they have an amazing pre-market activity. Definitely like Apple this morning. Next we have here SM. Did you mean Zoom? Oh yeah, Zoom. Yeah, Zoom was it was a great short. I'm not sure how you traded it, but yeah, it was a great short. It could be difficult to trade. Lucid here this morning, they are pretty much flat right now. I don't think this is in play at the moment. They got the volume, 1 million shares traded. I just don't think it's in play right now, guys, to be honest. So I'm going to just keep that one off the list for now. I know they can be very explosive. BA today, yeah, BA is good. I like BA, even as a possible today. BA is nice. They could trade very well. We've seen these guys do some good stuff. They're up slightly this morning, 1.7, so that is good for them. AMD this morning, let's take a look there. AMD, man, AMD's daily is just ready to explode for another test of those all-time highs. I'm going to add them on here as well. We'll fine-tune this list, but AMD looks good, of course. Yep, I agree, guys. So a lot of you guys throwing out AMD. Yep, I'm on board with you guys. IonQ, I don't have high hopes for this one. Let's take a look here. IonQ, I mean, this thing is on our list more often than not. I just don't like the way this trades at all. So, no.
Let's go.
Yeah, I'm not gonna do it. VIR this morning. Oh no. Mali. No, this is no good for today.
Your Papa Molly.
Yeah. So no good today. And the reason why, it's just very thin, right? You have 33,000 shares traded. You're up 5.6 with no volume. And the daily doesn't shows that you trade well on a regular basis. So it's not going to be anything great for us. Fuel cell this morning, okay, up 2.3. I wish they would have a better pre-market activity. It depends. I mean, it depends. We'll come back to it. Let's see. VIR, no good. LI we have on deck. Yep, LI is good, up 9%. NRXP. Did we look at that? We looked at that. Yeah, yes. We have it on our list already, so we're good there. NVIDIA, Tesla, all these companies, guys, all these tech companies are probably going to be in play today. I have already AMD up. I have Apple. I'm not going to add any more in this area, this kind of tech sector. I think I'm good there, but NVIDIA has been a lot of fun. Tesla EV, that has been very exciting. I have Lee already and a Neo as a possible, so I'm not going to add any more in that area. But again, if you like those instead of these, you can do that. Or if you have more space, you can maybe watch all of those, right? FCEI this morning, this one not coming up for me. Nope, we'll skip on that one. So XBEV, same thing with XBEV. I got a couple of EVs already on my list. You can add a XBEV if that's a preferable. I think that looks good too. Also Toro. All right, we'll stop here. Let's go over to our YouTube chat this morning. Oh, you meant fuel cell. That's an L. Yeah, so fuel cell, I added it on here. I'm on the fence on it right now. It needs to show us a little bit more action, and we'll see. All right, let's take it to YouTube this morning. Good morning, guys, over on YouTube. Let's go and take a look at Tony. You're giving us PTPI. What is this one?
6-ish million share. I don't see a catalyst this morning. Maybe it has something. I'm not saying it's surely got the gap. I have not looked this one up. I just usually we're not trading stuff that's $3.50. It's pretty rare. Yeah. Especially with the low float. So
Yeah, the float on this one. Let's check your PTPI. You said three
Action's not
million.
too terrible, but nevertheless.
Yeah, it's not too bad actually. It was ugly early on. It's getting better as it's holding here. It's got volume 13 million up 72. We can come back to it. The daily doesn't matter much on these lower flow stocks, right? They usually have a horrible daily anyway. We just got to see what the price action is going to turn out to be today. We'll keep it on here for now. Heading down CCL, we do have mRNA. We do have, again, all these companies that were active on Friday are in play today again. Most of them going the opposite direction. FENC. I don't like this pre-market action. I don't like the daily. The float on this FENC, 21 million. Yeah, for a lower type flow stock, I would like to see better action. It has a nice drop, guys. 47% this morning, 510. I just wish we had a little more volume on this one. So just be careful on it. It could be interesting, though. It could be interesting if you do like this style of stocks, this price action. Or this price target, it could be interesting at the market open. Fuel cell we do have, so that's good. NCLH, yeah, I have CCL, guys. All the travel companies are going to be nice today. So I got CCL, I got American Airlines, I got United, we got Hertz, we got BA, we got a bunch of stuff that probably were all in play on Friday, right? So just take your list from Friday and reverse it today. If you went short, go long today. Obviously, just kidding. Do a little analysis first before you decide to do that. All right, guys, let's go ahead. I think we're good to go to announcements. Let's do that. And I'm going to bring up our website today so we can kind of see where things are at. Let me just give me 2 seconds to do that. As time doing this, guys, please hit that thumbs up over on YouTube. We appreciate it very, very much. It does help us out a ton. So, guys, here's our site. To take a look at where our webinars are, just come to bearbootraders.com. Head over to the webinar area right up here. You're going to see our schedule for the upcoming week. So definitely take a look at that. We're busy throughout the entire week. Here's the rundown. Let Norm take over from here.
Yeah, so every Monday night, 8 p.m. and 9 p.m., we've got our onboarding and tech webinars. Those are live each week with Carlos and Kyle. They will be this evening as well as we kick back into full gear. Except for the website, I guess, because it's not updated. So I don't know. Carlos, do you know whose webinar is tomorrow night? Carlos?
Oh, sorry. I was talking on mute. Yeah, talking on mute there. So I know we do have some stuff scheduled for tomorrow.
We've got a full week.
Yeah, we do have full week. So I'll check who's on and we'll get it up here.
Okay, just skip over that.
Let's skip over that. Here's
we do have Kreda, who we'll be speaking to also in a couple of minutes. But Tuesday. She's doing Tuesday? Okay. She's doing it. This says it's tomorrow, 5 p.m. Eastern. We'll have to ask her in just a second.
We'll have to
Kreda, taking the pain out of trading, decoding your trading challenges, FOMO and over trading. Yes. We have a member presenting tomorrow. And Kreda, Mike? Okay. There we go. So we've got 2 webinars tomorrow. And that's what we got. So if you would go to the normal announcement slides now. Just a reminder that all the Super Chat revenue is going to the Fisher Center for Alzheimer's Research Foundation for the remainder of November. I have a new one in December we'll announce in a few days. Don't forget about stocktradingsimulator.com. When you go there, you can use our free web-based replay simulator to try out strategies. You can also sign up for the homework newsletter that's sent out by Eamon and Simon. Every twice a week. I believe it's Wednesdays and Fridays. They give you a few specific tickers to take a look at and times to try out some strategies. So just sign up in the bottom right-hand corner. If you're watching on YouTube and haven't been in the chat, you'd like to give it a shot, use the promo code premarket24. Just go to bearbulltraders.com, scroll down about halfway down the page, and you can click that test drive now button, sign up, put in premarket24 as a promo code. You'll get a discount. Does not recur. It only bills you once. And then you have 7 calendar days, 5 trading days. You have to choose a different kind of membership if you decide it's a fit and you want to continue on. And then our Black Friday sales coming to a close. Use the promo code BlackFriday45 to get 45% off the Elite Annual membership and 1 month of DAS Simulator included. Good morning, Kreda.
Morning, Norm. How are you?
I'm great. How are you? I'm just going to let you take it away because I can't talk this morning. So
Sure. And just to confirm, I am actually doing my workshop tomorrow evening. So
Awesome.
Tuesday, it is right. It's just this one that we're moving the schedule for, but all the future ones will be Wednesdays as normal.
Awesome.
So brilliant. Today we're talking about trading not to lose as opposed to trading to win. And so this is one of the more subtle concepts within trading psychology, and it may not apply to everybody. So I'm going to say that at the outset. So this will either really resonate with you or it won't be an issue for you at all. So I'm speaking to the people that it resonates with. And another caveat is just that what I'm going to talk about now, and the idea of trading not to lose being something that you'd like to steer clear of, that is not giving people a license to take on greater risk if this isn't an issue for you. So I'm just being very clear about that because it's only going to resonate with a portion of people. But what are we talking about? So we're talking about when you're trading and you have a mindset that you may not even be aware of that actually means that you're trading kind of defensively, or you're not actually fulfilling your true potential with it. And so what does that actually look like in terms of actions? How would you know that you're doing this? Well, if you're going against your trading plan in a way that you're moving your stop, so maybe you're moving your stop to break even when you're in a trade, but that's not part of your trading plan. Or maybe you're getting out of trades too quickly because you can't really stand the heat of being in the trade and the pressure of it, or you're afraid that you're going to give back profits to the market. So for some reason, you're deviating from your trading plan in a way that is causing you to not actually get everything out of your trade. And the key in this is, again, meaning that you're deviating from your plan. So it's not just if you're doing that and it's actually part of a structured strategic approach. It's if you're doing it and you'd actually prefer not to be doing it. So that's kind of trading not to lose. And it's a subtle difference between actually pressing on to try and get everything you can and reach your full potential trading, and then being more defensive, because it doesn't necessarily mean, if you're trading like this, it doesn't mean that you're going to be losing trades, because you're actually being quite defensive and you're trying to minimize risk. But it could mean that you're not getting the profits and the return that you are capable of getting in your trading. So just to put this in a sports analogy, because it's quite a clear and concrete analogy to use, if you imagine two teams playing soccer and one team is 1-0 up, and instead of actually trying to go and score more goals, they just try and protect their lead. So they go really defensive, they use a defensive strategy, and they try to stop the other team from scoring any goals. That would be trading not to lose as opposed to trading to win. And while that could get you results, if you're a soccer player, maybe you win the match that way. But if a championship comes down to being decided on goal difference, then the team that hasn't actually pushed on to fulfill their true potential in terms of scoring goals will be the team that loses out. So, if it came down to that level of a difference. And so if you think of that in your trading, it's not that this will be causing you massive devastation potentially, but it really could be holding you back from achieving your true potential. And instead of actually trying to solve this and offer a band-aid for it, because it can be quite a complex issue for people, I just wanted to talk through a few different core issues that might be behind it. So not all of these will resonate with you, even if this is something that you do. But what I'm trying to offer is a kind of signpost so that if you're feeling like you're resonating with this topic and it is something that's happening you, and you may not even have been aware of it up to thinking about it now, but if it is happening for you, then I'll just talk through a few root causes and you can see if any of those resonate with you. And then if they do resonate, that's an avenue for you to explore further if it's something that you would like to transform in your trading. So if you want to actually reach your full trading potential and be getting all the profits that you're capable of, well, then this is something that I would suggest that you try and address and understand more about yourself. So the different root causes, what I've come across in my coaching at least, is one aspect of it can be a lack of self-confidence. So even though you're there and you're trading and maybe you're aspiring to be a professional trader, or maybe you currently are, there might be some part of you that doesn't actually believe that you can make it, so that you can't actually become this trader that's consistently profitable. And so instead of pushing for that goal, you're kind of trying to just not lose. So you're trying to prove that you can still be in the arena, that you can still be in the market, and you can still be trying this trading game but you're not actually allowing yourself to push for the bigger goal that you want because you're holding yourself back because of a lack of self-confidence. So that's something to address if that's resonating with you. And then another aspect of it can be down to money mindset. So for anyone who's in the BBT webinars, you've heard me talk about this a lot, but I know that there's people on YouTube that maybe haven't. So your money mindset is the way that you relate to money. And it's actually a set of beliefs that you would have cultivated from your experiences with money, from how your parents or caregivers approached money, and basically a whole lifetime of dealing with money. But your relationship with money can actually be something that's holding you back in your trading. So if you have a money mindset of lack or scarcity, so you're always afraid that you're going to run out of money, or you always feel that you just don't have enough no matter what's in your bank account, this can be playing out in your trading in terms of playing not to lose as opposed to playing to win, because you're in that kind of survival mindset where it's more important to protect what you have than it is to actually push for more. So that's how your money mindset can actually be contributing to you playing not to lose in your trading. And then another piece of it, and this is more complex, so I'll just name a few of these beliefs, but as we always do, come back to them, core limiting beliefs. So where people have beliefs in their subconscious mind that they may not be fully overtly aware of, and these may not even relate to trading directly or to money directly. But these are beliefs around things like not trusting that good things can happen to you or without your effort, so that you have to control everything and you have to put in effort for anything good to happen. That can play out with you actually micromanaging the trade. So getting out because you feel like actually it's going to go against me, or I'm going to have to give profit back here, even when your strategy tells you to stay in. So that's a way that can manifest for you. So if you're someone that tends to micromanage and need to control things, that can turn into trading not to lose. And some other ones then are just core limiting beliefs around needing to be right. So actually feeling like you can't make mistakes, that's some threat to your subconscious if you make mistakes, or your kind of tendency towards perfectionism. These different core beliefs that might be in your subconscious could be playing out in your trading, and essentially they lead you to trying to protect any profits that you have gained already. So especially if you've had a trade that goes for you, so you've won money on the trade before, and then you go into the next trade and then you find yourself actually getting out too soon or moving your stops or whatever because you're so afraid of losing the profit that you've banked. So that's kind of defensive trading. And when that doesn't align with your trading plan, it's possibly a mindset of trading not to lose. And as we said, while it's not necessarily devastating to your trading, it means that you're holding yourself back from fulfilling your true potential. So there are a few avenues for you to explore if you find that this is resonating with you. And there's a load more content in the BBT webinars as to how you might actually go around resolving this. So just direct people to those if you want to dig into this in more depth.
Awesome. Thank you very much, Kreda. And we look forward to seeing it tomorrow evening too.
Thanks, Norm. See you.
Have a great day.
All right. Thank you so much, Kreda, guys. Let's give her a thumbs up over on YouTube. We appreciate her coming in every Monday and Wednesday, giving us her amazing advice. All right, guys. Let's get to it here. Let's look at our watch list. We have Lee on deck, which is looking pretty nice this morning. I like the pop up. I like the daily on this one. We have CCL, which is also very active. Beautiful pre-market action, guys, and amazing volume, 1.8 million at the moment. American Airlines also looking good. Great volume as well. Axie will be an interesting one today. We'll keep this one on here. Zoom, guys. I like Zoom a lot. I know it doesn't have a lot going on right now in the pre-market, but I like this sell-off that happened on Friday. It was already not doing so hot, right? We saw that a couple of days, the beginning of that week, actually, we saw that drop there happening, and then a little bit of recovery. And obviously on Friday with the news of possibly, more bad stuff happening with COVID, this thing popped up, but it sold off. And today I could hopefully see a continuation back down to where it was a couple of days ago. So I like this one here because of the possibility of a continuation towards the downside. We have Apple here, which is looking very good. There's a few of these. We can look at NVIDIA, a lot of the tech companies bouncing back, Tesla also doing some stuff there as well. But I like Apple this morning. Very, very clean. I love their daily here. They had a breakout just a few weeks ago, right? Beautiful breakout here. Well, it's a horrible line. There we go. That's better. Beautiful breakout here. Saw that nice trading into the all-time highs, I believe, right? All-time highs on Apple. Yep, all-time highs. And then a nice pullback. on Friday, and now we're back at it again. So can we get back up to this 165? AMD also looking good for a possible breakout and a test of their all-time highs as well. So those two looking very nice this morning. Secondary list, BA looking good. Hertz has some potential there, as Norm explained earlier. American United Airlines also another one. Neo is on deck as well, and we have Fuel Cell also here, which not looking so hot. We're keeping it here to see if it can get better, but not looking so hot right now. A couple of low flows in the way here. PT, PI, BFRI, and also NRXP. NRXP probably the best one right now, looking really good. Love this ABCD pre-market action you're getting here. A couple of breakouts, so that is holding nice. 13 million, up 44%. Probably the favorite this morning so far. BFRI is just, man, this is just wild. Careful with that one. And PT, PI, we'll love to see this get back above the VWAP and hold here if it's going to do that. So we'll see. All right, let's get to it. Let's start with LI. Let's do some levels here. So LI this morning, let's go over here, get our, here we go. Levels high of the pre-market at the time, we're sitting at 35.45. So we'll slam a level there. And then below that, we do have a reach here on the daily over to 34.80-ish. So that's good. Towards the bottom here, another one at 33.87. So a couple of levels there on the daily. If you look at our pre-market action right now, these levels that we're getting here off the daily is 34.80, 33.87. You can see how well that is playing here in the pre-market as well. Area of resistance, nice support right after that. So that's looking good. Definitely want to have that on here. Then you have your pre-market high up here. So some really decent levels off the daily on the, your pre-market high seems to have a couple of touches here. Most recent area around here was around July. End of July there, and then also it looks like end of June you have some touches there as well. Above that, we do have a level all the way up here at 36.66. We'll put a level there as well. Below the low of the pre-market, guys, tons of stuff happening there. Previous day close, highs and lows from the last two trading days. You're getting a nice breakout here out of 33 this morning, looking very, very good. Great volume. Here's CCL, guys. Beautiful in pre-market action this morning. We have some levels in the past which I think are going to be all good right now. So 1898 is what is this? Where are we getting this level from? It's just sitting here. This was the high of the pre-market on Friday, right before we had this insane drop. So on Friday, that was the high of the pre-market. We're testing that right now, so we'll keep that right on there. Then above that, we do have the highs and lows from the last two trading days right over here, and then towards the bottom right over here. So I think you're set on CCL. I don't think you need to add anything else. Very good stock this morning. Probably one of my favorites ones so far. The way the volume is coming in, the way this is trading in the pre-market action, just very, very clean. American Airlines, let's get rid of some of these levels. So we see the highs and lows kind of taking over some of the stuff we had on Friday. If we look in here, your highs right now pretty much close to the highs of Friday. At the moment, towards the bottom, you have your previous day close, your lows from Fridays, and then towards the top, you have the gap down, right? You have the lows and highs from Thursday right on here. So you're pretty much set there. Let's see, do we have anything in between here? We'd love to find something in between this area, and it looks like we do. Right over here, only one candle at the moment, 1865. Do we have any more touches to this? Looks like we have a couple of touches, nothing great, right? This 1823 level that we're sitting on now is a good one. You see a couple of support levels there happening, and then you have the nice one here over at 19. Obviously, that is a great, great level of support. It has been for some time this year, since July at least. Bounced from that a couple of times. We'll see if this thing can get going. So both of these two travel companies looking really good this morning. Here is Oxy. Oxy could be exciting. At the moment, again, it seems might move this down to a possible. Let me see how many we have. 1, 2, 3, 4, 5, 6, 7. Yeah, I think this could be a good possible. I won't completely take it off the list, but a good possible on Oxy. We'll remove it from here, because I think the other stuff that we have on our list looks really good, right? If we keep it down to 6, do we have 6? No, we still have too many. 1, 2, I forgot mRNA all the way up here, so we got to go back to that one. I will scroll down and miss that one, so we got to go back to that. But I think, yeah, this looks good. Zoom, guys, I like this one this morning for a potential continuation towards the downside. 213 is the low of the pre-market. The high of the pre-market sitting up here over at 224.17, so slamming level there. Highs and lows for the last two trading days are surrounding the price action, so you got a lot of levels in between here right now, so you're pretty much set as far as that. I don't think you really need to add anything else. Like this one a lot for a short this morning. Here is Apple right now, guys. Beautiful daily. Just take a look at how this has been trading. Let's remove some of the stuff. Nice little breakout out of a 152. Nice little breakout there, hitting new all-time highs over here at around 165. What is this? 165.65. So we'll slam a level there. And then you got highs and lows from the last 2 trading days, right? Right over here between 162 and 156, your previous day close. The low of Friday, the low from this morning is a little bit higher. We're probably sitting, what is this, 157, 40-ish. So we'll put a level there, 157.40. Your pre-market high slightly above the highs from, the lows from Thursday. Right, so you got a lot going on here. This was your previous day. You're open on Friday as well. You got a couple of support happening there. I'm not going to mark a pre-market high right now. Let's see where this ends up going. But you do have this level on here already, which is a good one for Apple today. We'd love to see this break out nicely into some of these levels we have here, 161, 162. I don't think we'll get to 165 unless some really good news breaks out today, but we definitely have the potential. Great volume, guys, 1.6, up 2%. Looking really nice. AMD has been very nice to look at and trade as well. Right now, they're looking to break out of this area of resistance, which is right over here, which is your pre-market high as well, over at 158.47. So a lot of resistance happening here. Our all-time high sitting at 161.80. Let's see if we could test that today. So if we continue with all this positive plays at the moment, this can probably do that today. All right, secondary list, we have Oxy, we have BA, which actually looks really good. Nice run in the last couple of minutes. Hertz is good potential. American Airlines is another secondary, but I do have American Airlines already on here, so that is set, good to go. We have NEO as well. I have Lee, which looks a little bit better this morning as far as volume and a possible breakout on the daily. NEO has 900,000, but again, I don't see a breakout potential like I do with Lee. Lee has a nice breakout potential based on the daily here. We'll see if that can continue. And then we have Fuel Cell, which I don't think is doing a whole lot right now, so I'll keep it here as a possible for the moment. All right, let's get over to our moderators watch list. Let's see what's going on there, what our team is looking at. I'm going to just resize this real quick. Guys, all over on YouTube, make sure you hit that thumbs up. We appreciate it very much as we get this over here for you guys to look at. Just give me 1 second. Here we go, moderators lineup, and we'll bring this in right over here. Okay, very good. All right, so moderators lineup, guys. Let's see what we have going on here. Let's start with, looks like Eamon. Eamon is looking at AMD and PLTR this morning. John is looking at mRNA and Tesla. Dima is looking at Apple, AMD, Lee. Mike is looking at mRNA and Apple. Actually, you know what? Now that you guys are mentioning mRNA, we forgot to go over that. We'll come back to that list. Watch list for Thor, CCL, American Airlines, United, BA, Apple, Lee, and the SPY. And Jared is looking at a couple of things here. Some moving averages on the daily at 200, looking for some strength in there. Watch this for him. He's looking at some energy stocks, mRNA, AMD, NVIDIA, and BA. So very similar watch list from the moderators. We're looking at travel companies. We're looking at mRNA, and we're looking at some tech companies like AMD, NVIDIA, and Apple. All these companies are in play today. We forgot mRNA, guys, and it's going to be an easy one because you have levels from Friday already. If you go down here, highs and lows from the last 2 trading days, you're pretty much taken care of towards the bottom there. You got, those levels got you covered. And then here, high of the pre-market right now, we can slam a level at 370.81. And then above that, we do have a nice level here, a couple of areas here. I like this one here at 398. So I think this is looking very good, guys. Up 12%, 1.8 million shares traded. So you got a lot going on there on mRNA today. All right, excellent. Norm, anything else that you like maybe that you're watching this morning? Besides
I think patience at the open is going to be really important after what took place Friday. I think a lot of people are seeing the market up this morning. They might be eager to jump in. I want to see what the big money does. They're probably going to sit and wait to see what kind of direction we find for a few minutes, see what happens. I don't want to get trapped in something like that. So
I agree with you. Patient is going to be key, guys. Guys, 9:15. Brian is coming in with his list. He has mRNA, LI, CCL, Piton, and KRYS this morning. KYRS is a low flow. Which we look at that one. I forgot what that one is. KRYS.
That's the one that's got a huge gap and
thin
volume.
Right, yeah,
be super careful on that.
careful on this one, guys. 138, 1 point. I mean, the volume is high. This volume is high, but the order flow is just so bad. And we saw the spread up to $1 earlier.
Well, all the volume was earlier.
Oh, what was the volume early before
Most
we saw? Yeah.
Most of the volume was way early. It picked back up a little bit after we looked at it again, but it's died off once again. So I don't know. The spread on that just tells me that it could eat you up real fast.
Yeah, very, very scary stuff. Guys, over on YouTube, thank you so much for joining us this morning. We'll see you again tomorrow morning at 8 a.m. starting with
for me, dog.
Engineering the Markets. I agree 100%. So hit that thumbs up, subscribe if you haven't done so already. We appreciate it very much. It does help us out a ton. Good morning from Andrew here in the chat. And it's happy Cyber Week, he says. And also watch out, Brian's list put AMD and he's putting mRNA. So he's copying Brian's list and putting AMD and mRNA on his list. Guys, thank you so much. Trade safe. Remember, tonight, onboarding class at 7 p.m. Tonight. So 7 p.m. onboarding class this evening, guys. Join me. You can come to the website, bearbulltraders.com. Join me tonight. A couple of us are going to be there, give you an insight of our environment, our community, and you guys can have access to the chat room for an entire week, see what our members are like and everything else. So take care, guys. Trade safe. We'll see you guys tonight at 7 p.m.
Take care, guys. Trade safe.